Hello, this is John Seconder with AllinFutures. Right now it's about 1:12 Eastern Time. I kind of want to get a video out in the middle of the session just so we can really look at things on the right edge of the chart. And, it's always helpful at the end of the day generally to look at more of a macro picture, see where the trend's at, just to get kind of a sense of what technicians are going to be looking at, and most likely what retail traders are probably going to be fading. And what I mean by that is, with the daily chart of the E-mini S&P 500, whenever you have a 10, a 20, and a 50-day moving average rising, it's almost intuitive as a technician to say the trend is higher. Smart money's been consistently coming in. There's been higher highs, higher lows, and there's really no sense to fight this trend unless, most likely, you're a retail futures trader who, for some reason, loves the fear, sees this one red candle, and would take this, even if it happens once every 10 years, they're going to keep, selling into these rallies, selling into these breakouts, selling off these highs, looking for another move like that, and it is just so detrimental to a trading account. Right now, the trend's higher. On a long-term time frame, you still want to be looking for shorts to get squeezed, more longs to get in, and prices to make higher highs. But then once you drill down and you start to get kind of a better picture, you see that these moving averages are crossing and that the current channel really hasn't been broken out on a closing basis, and then there's some tails up here. So the moment that you're not having the trend alignment is then the moment you can say as a professional, okay, now how can I judge my risk? If you wanted to go ahead and take a short position up here, is it worth it to put a stop above these highs and maybe, try to capture this channel? Then that's a whole different story. That's something that you can consider. Not something that I'm looking to do, and I'm going to get to what I've been doing today in a minute. But right now it's just something to make clear that, okay, until, we get prices back above these highs, it probably doesn't make sense to really get aggressively long at current prices either. So now we kind of get stuck in this, if I had to do anything, I would look for the breakout, but I'd rather see the breakout than hope for the breakout, and maybe scale back with position size and then drill down a little bit more. Once you drill down a little bit more, you're going to see the volume come in obviously on the moves higher. You're going to see the higher highs and the higher lows. And then you're going to say to yourself, well, I wonder if, and using Realtic software, if I can use some pivot lines to maybe get a better sense of where we are in the standard deviation of things. And okay, we just on a 15-minute basis closed above daily R1, and most likely until we get back below these lows of 14.15, we probably will come up and hit this yellow line, which will then trigger another breakout. Shorts will get in, and on more of a short-term detailed time frame, probably more bullish than anything else. Now, if we then close back below these lows, then a trader can say, hey, maybe I even want to take a short position and risk these highs and play down either to this low or to the daily pivot. The problem with this trade right here is not only is it going against the trend, but the risk reward isn't really great. So then once again, you can drill down to a 1-minute time frame, and on a 1-minute time frame, doesn't look like I'm getting anything. Let's see if I can go down. Well, we'll go down to a 5-minute time frame. On a 5-minute time frame, and as you can see, it's just it's very, very small bids I think that are coming in right now. But on a small minute time frame, it doesn't change things. So the risk reward is still going to be fairly obvious. If you had to do anything, you probably either want to be long right here with a stomp underneath these lows as the moving averages are trending higher, and you want to play to a move right probably to this yellow line or a little bit above, and maybe if you take maybe 3 to 4 contracts here, you can scale out of maybe 2 or 3. If, on the other hand, you feel that this trend line has been broken, and the market starts to fail out on a test back of this trend line, then it's just simply probably moving your stop to break even, or once again confirming it with a move under these lows and maybe taking a small short position. That's fine. As traders, we really don't care as long as we can define risk and as long as we feel comfortable going with what we think least resistance is. One thing that I think is extremely important to look at is going to be a chart of the QQQs. And the chart of the QQQs on This time frame, let me see if I can put in a little bit more. I think this is an extremely important pattern that's going on up in here, and I think it's going to be seen. I want to just go ahead and drag another little chart into this. I think it's seen a little bit better here. And with that said, let me go ahead and doing things on the fly. You have these series of higher highs. Let me go ahead and change this to regular. You have these series of higher lows. You have a series of higher highs that then start to fail. And now we're definitely in this coiling pattern where even though we suspect that a move above these highs, and in fact the number that I'm really going to be focusing on is 47. Move above 47 will then be what I consider a very important inflection point. If it's above 47, yeah, you have to take a long position. But if it fails above 47, and I mean even a fail on, say, a 30-minute time frame, close back below 37, then it could be a very quick move to the downside. But you have to be looking to buy the breakout. Don't look to pick a top. Don't look to play into that thing. If the market then comes back down and fails underneath these lows, say that 46 and a quarter area, then I think it's going to be in a world of hurt on the downside. As far as something that I wanted to talk about, it's in the NQ on a trade that, it's just a small trade with a little, what I call, let me go ahead. Little kind of system, management software that we're using on Realtick. And as you can see, it's, selling 5 at 01.5, and then buying 2 at 98, and then buying another 2 at 98 as well. And it's just something that I wanted to kind of talk to you about, what a trader could potentially look for as far as maybe why to take this trade. And one of the reasons that I want to kind of focus on is how traders try to play the daily pivot. And in the daily pivot, and let's see if we can go to a 1-minute time frame on the NQs. On a daily pivot, I think so many traders, really they like the pivots because it makes it kind of easy to see, but they're not really sure some days how to play them. And I think it's going to be different on some days, than not. And that's something that's very hard. Some days you want to be buying the pivot, some days you want to be selling the pivot, some days you want to be exiting the pivot, and some days you don't. And it really, really becomes kind of hard for traders to figure all that stuff out. We'll go back to the 15-minute time frame. What I wanted to talk about was you get this move, this kind of strong V move into the daily pivot. It fails a little bit. Definitely shorts are going to come in. And then it is very, very, very common to come back and really get traders to think, all right, hold on. Do I have to cover the shorts that they're taking up in here? Do I have to be taking long positions and then looking for, maybe a failed move here? Or do I simply do nothing because it's at the pivot and it's this great efficient area where, nothing's going to happen? And I think what I saw today, and the trade was taken right around this time, was you had this kind of V move into the pivot on very good volume. Then you had a pullback and then a move back into the pivot. And now, you have to think to yourself, okay, these highs are in place. The volume's not coming back in. The energy that it's going to take above these highs, it could happen at any time. But when you start to think about how you can play the risk, and with the Qs still in a precarious position, the risk is going to be, 07 and a quarter, which is only going to be maybe 6 points. But then the reward, if you look at a 60-minute time frame, is going to be pretty great because, if you start to take out these lows, then it's gone. However, in all honesty, it's just a day trade move where on this kind of like, I call it like a play account or something. It's only $280 with just one other contract still outstanding. So it's something, I call this like the system, almost like simulated trade tester or so forth. But what I wanted to really get across today was this. You get these great moves, starts to fail, back into the pivot, and so many traders are going to just freak out. And my point is, if you have a move back in here, traders getting flat, and you have an easy area to define risk, it's okay to play against that risk, especially when we have the macro time frame and the 60-minute time frame and the 15-minute time frame telling us kind of different things. All right, so now that I'm flat, and now that I was saying that, yeah, if anything, you probably do want to look, for maybe a small long position up in here. As traders, you have to be aware of everything, okay? Right now you want to be long, but then, like I was saying, a move below here, you probably want to be short. Above these highs or even testing these highs, you want to go to break even. Objective at the yellow, but judge that on volume and so forth. Quick lesson for the day. Good luck and take care.